This is Chapter 7, Question 2, and we will again be looking at the allowance method, this time with the balance sheet approach. Let's look at our problem here. Jedi Company uses the allowance method to account for uncollectible accounts receivable. Past experience suggests that 1% of accounts receivable are uncollectible. For year 1, year-end balance of accounts receivable is $5,340,000. The allowance for uncollectible accounts has a credit balance of $41,000 at the beginning of year 1. During the year, bad debts of $54,800 were written off. Determine the amount of bad debt expense for year 1. So I want to do a quick recap like we did in the previous video on the different approaches for the allowance method. You have the income statement approach and the balance sheet approach. Remember, with the income statement, you're only going to use income statement accounts to help calculate your bad debts. So you'll use sales and then use bad debt expense. In the balance sheet, you're going to use balance sheet accounts. So here we'll be using accounts receivable and the allowance for uncollectible accounts to calculate our bad debts. So to first find bad debt expense for year 1, we need to find what our year-end balance of allowance for uncollectible accounts for year 1 was. That'll help us work backwards, which you'll see later in a T account, to figure out bad debt expense. So to figure out what this year-end balance is, let's look back at the problem. And it tells us here that past experience suggests that 1% of accounts receivable are uncollectible. So we take this year-end amount of $5,340,000 and we'll multiply it 1% by 1%, and that will tell us what our year-end balance of allowance of uncollectible accounts for year 1 is. Let's go ahead and do that. So we take $5,340,000 multiply by 1%, and that's going to give us our year-end balance, which is going to be $53,400. Know that our end balance in allowance for uncollectible accounts is $53,400. So we're going to plug that into our T account. In the problem, we're also told that the beginning balance is a credit balance of $41,000. So let's plug that in as well to the T account, $41,000. Next, the problem also tells us that during the year, bad debts of $54,800 were written off. So let's do that journal entry and then we'll post it to the T account. So writing off bad debts is a debit to allowance for uncollectible accounts. I'm going to abbreviate uncollectible accounts there, $54,800. And then it's a credit to accounts receivable for the same amount, because we are now writing it off our balance sheet. So put a note down here. So write off. So we can now post that to the T account as well. It's going to be $54,800 as a debit. And now we can solve for this number here, which is our bad debt expense. So we take our $41,000 plus bad debt expense minus the $54,800 debit equals our end amount of $53,400. So doing some simple algebra, we can solve for bad debt expense. Add the $54,800, subtract the $41,000, and that will give you bad debt expense, which equals $67,200. Finally, let's make the journal entry for bad debt expense. It's our debit for $67,200, and we credit allowance for uncollectible accounts for the same amount.